In this video, we'll be comparing FundedNext with Funded Pips and find out which prop firm will be most suitable for you. So let's first up talk about Funded Pips. They're made a name of themselves with their straightforward approach and competitive offering. One of the biggest draws for Funded Pips is their two-phase evaluation process. It's a pretty standard in the industry, designed to test your consistency and risk management. Their profit target are reasonable, typically around the 8% for phase 1 and 5% for the phase 2. What really stands out though are their tight spreads and low commissions, which can make a significant difference in the bottom line. Now let's switch up to FundedNext. They've been making waves for the last many years with their unique models and strong community presence. So FundedNext offers a couple of different evaluation models, which is different compared to Funded Pips. They have their standard two-step model similar to Funding Pips, but they also have a one-step model and an express model. So the one-step model is for those who want to get funded faster with a higher profit target, but only get one phase. The express model is even faster, focusing on consistency with a smaller profit target. This variety means you can choose a path that best suits for your trading style and risk tolerance. Now let's compare these two websites or prop firms side by side. So let's start out with evaluation process. And Funded Pips is a solid two-phase, while FundedNext offers more flexibility with a two-step, one-step and express model. If you prefer a simple consistency approach, then it's Funding Pips. But if you want options, then you should definitely choose a FundedNext instead. Now let's talk about profit targets. Both are competitive. Funded Pips is around 8% and 5%, while FundedNext varies by model, but that one step is around 10%. Now let's talk about the daily drawdown. This is a critical one. Both firms are typically around the 5% daily drawdown limit, which is pretty standard for the industry. However, always double check the specific rules for the account size that you are considering for these two websites. Overall drawback, again, usually around the 10 to 12% for both, but again, read the fine print. Now for the scaling plan. Funded Pips scales every 3 months based on performance, while FundedNext also has a robust scaling plan that rewards consistent profitability, with the potential to reach massive account sizes. And lastly, the profit split. Funded Pips generally starts around 80%, while FundedNext is highly competitive, offering to a 90% profit split, which is fantastic for traders. So which one of these two prop firms is best? And this is where it gets subjective, like any other comparing video really, as the best firm really depends on your individual trading style and preference. If you are someone who values simplicity, tight spreads, and a clear, consistent two-phase evaluation, then Funded Pips might be your go-to. Their straightforward rules and solid scaling plan make them a reliable choice for many traders. They're excellent for those who appreciate the no-frills, performance-focused environment. On the other hand, if you appreciate flexibility in evaluation models, the potential for a higher profit split, and a firm that can often introduces innovative options, then FundedNext could be a better fit for you. The different models allow you to choose a challenge that aligns perfectly with your risk appetite and how quickly you want to get funded. The 90% profit split is also a massive incentive for consistent traders. But that is it for this tutorial, or this comparing video really. If you have any questions about it, please leave them down in the comment section below and I'll try my best to answer them as quickly as possible. See ya!